Hi there, it's Dean Odell with 7 Gables Real Estate in the Odell Group. Today is July 14th. It's time for another Tustin Talks. This is the Tustin data version. We'll go over Orange County and then followed by Tustin data for the 3 zip codes. Well, lots of changes going on in this market. We got a shifting market. Let's talk about that right now and go to the first chart. Okay, so looking at the first chart, Orange County active listing inventory. Right now we have 3,803 homes. That is up 312 homes in the last 2 weeks, and that equates to about 9%. And if you look where we were last year on the red line, we were at 2,528, which means we are up almost 50% in inventory. Of course, that was a historical low last year. So what is the average? Well, the average is 3,861. So we are almost getting close to the average for this month. It's the highest level of inventory we've had since November of 2020. And this year, cumulatively, believe it or not, we still have 3,632 less homes that hit the market. So even though we're getting to normal inventory, we're just making up for lost time. Also, one thing to notice is this time of year, if you draw a vertical line, you will see what normally is happening this time of year is inventory is starting to level off or even go down, right? So now we are on this trajectory up. So we need to see this thing level off or start going down to get more into a season normality. So we're kind of at this little turning point right here on listing inventory. It's gonna be interesting to see which way it goes. And let's move to the next chart, which is demand. Orange County demand has gone down in the last 2 weeks. It's gone from 1,861 homes to 1,710 homes. And if you look where we were on the red line last year, we were at 2,761 homes. Again, last year was a record type of year. We are down 1,051 homes or about 61%. So that is a big change in the market of how many homes went into escrow last year versus this year at this point in time for the last 30 days. If you look at that demand angle going down, it's not really that unusual when you look at this point in time, it's almost always going down this time of year, except for the green line. Again, we are at this kind of turning point, this moment in time where we're gonna see, is it gonna go up? Is it gonna go vertical? Or is it gonna keep going down? We'll see in the next Tustin Talks, but let's look at our expected marketing time. So the expected marketing time we know is a function of supply and demand. If you remember at the beginning of the year, we were just above 20 days. We hit a low of 19, which was crazy. That's a hot seller's market. That's a hot seller's market. That's just crazy. Anything under 60 days is a hot seller's market. Now where are we? We are at 67 days. Say goodbye to the hot seller's market. We are now in a slight seller's market. Now, if we follow that trajectory of the orange line, if we stay on that same trajectory, we would even hit a slight buyer's market, possibly by mid-September, early October. So we'll just have to see how that plays out on the next Tustin Talks and with the next data. But here's one thing we know, we are in a transitioning market. We are in a changing market. We were up 11 days just since the last 2 weeks. We were at 56 days, now up to 67. And last year at this time, we were at 27. So yes, the market's transitioning, the market's changing. Let's see how it's going by price range. You can plug your house in, what you're shopping or what you're selling. Look at the expected marketing time this year versus last year. And you can see the share of the demand versus the housing inventory. And that defines what the expected marketing time is. And you can see that it has increased quite a bit since last year. This is how it breaks down by price range. Okay, now this chart we threw in here is kind of interesting because I want you guys to realize the sky is not falling, okay? It's not 2006, 2007. You've heard me say that before, and I wanted to demonstrate why. This was the expected marketing time in 2006, 2007, right before the market crash. You could see the blue line in 2006. We were already up to close to 215 days. The purple line in 2007, we were getting closer to 300 days. So those are both deep buyer's markets. If you look at the legend there on top, over 150 days was a deep buyer's market. That's where we were in 06, 07. Let's go down to the orange line where we are now, and we just spoke of 62 days. This is a long way from 2006, 2007, you guys. We're just heading back towards normal, and we'll see if we leave that in the dust, but right now, that's where we're headed. Okay, and you can only find this data here. This is for our 3 zip codes in 92705, 92780, 92782, and those are the Tustin zip codes if you're familiar with that. So let's look at this June versus last June. The amount of inventory is up, especially in the 92782 zip code, Tustin Ranch, and the Tustin Legacy. Almost 3.5 times the inventory this year as last year. 92780 has had a double, and 92705 has half as many more homes as they had last year. Let's look at the amount of listings that happened just in the last 30 days. You can see that those are up everywhere except Tustin Ranch, which is really odd. I don't know, everybody in Tustin Ranch must have listed last month instead of this month. It's kind of weird. And their number is so skewed there at almost 345%. That must have been what happened. Then we look at the solds. The solds are down in every zip code, especially Tustin Ranch. So why is the inventory climbing so much in Tustin Ranch? I think if you look at the pending, down 45% from last year. 92782 is overpricing. They've got inventory that's building. They're up 345%. They don't have a whole lot of new inventory that came on, but yet they're setting records for inventory. And if you look at their solds and pendings, they're down almost 50%, which is definitely more than most of the zip codes. I mean, you look at 92780 comparatively, they're up 73% on pendings. So interesting stuff. Okay, so if you look at months of inventory, you could see that, yes, the months of inventory have doubled in the 92705. It's gone from 0.7 all the way to 1.4. Wow, okay, but here's the thing. Need about 4 months of inventory to get to a balanced market. So you can see in most of these zip codes, we need 2 to 3 times the inventory just to get to a normal market in terms of the months of inventory, meaning how is the supply relative to the demand. So if there's 10 houses that sell in a month and there's 100 houses on the market, that's 10 months of inventory, right? Right now, we have anywhere between 1.4 to 2.2. A lot of times that has to do with the price range. The lower the price range, usually the faster the market. North Tustin is showing up hot though, you know, it's doing pretty well for being the highest average sold price. Shows that that market is in demand, or the agents there are really pricing their properties correctly. Final list price to sales price and original list price to sales price, that's kind of interesting. You can see they're going down a little bit. People, you know, still paid 100 and 101% versus, you know, last year's 102. But you can see in the other zip codes that it is calming down. 92780 was at 105. Now it's not 102 and 101. So you can see that it is calming down a little bit there. Our average days on the market still down in North Tustin, 16 versus 23, and it's up in Tustin and Tustin Ranch Legacy. You can see those numbers. So interesting data. We'll see how it all plays out next month, but I would say that we're at a market right now that is just getting towards some normal numbers, and we're gonna have to see how it goes from here. So I'm gonna give the best advice I can to both the buyers and the sellers right now. Okay, buyers, well, we can help you here. I just had one of my agents I was just talking to, and he's so happy because he says, you know what, I can't believe it. We finally have inventory to sell, and I finally don't have to feel like we're gonna be involved with 10 offers on everything, and my buyers have to rush to write an offer this very minute. So I told him, I says, well, that sounds like we're getting back to normal, doesn't it? So that's what's happening here, you guys. And the reality is if you want a house and you find something you like, it's still a long-term investment. Yes, it could go down when you live in it, but you know, you're not buying a house to speculate on it. You're buying a house to live in it. And don't forget, the average person in Orange County is living in their home 21 years right now. So don't be looking at things this short unless you're someone who gets, you know, transferred around a lot or something, okay? Okay, so sellers, the most important thing in a transitioning market for you guys is to price your house correctly. If you guys price your house wrong, you're dead. You're dead in the water. That's all I can tell you. Because inventory is going to continue to come on. Old inventory is going to sit at an inflated price, and then those sellers are going to lower their prices, which is just going to make it more competitive for you. And then all of a sudden you're chasing this market instead of coming out at the right price and having a pool of buyers that are out there that are willing to pay a fair price, but I'll tell you what, as soon as they see something overpriced, they're just not even interested anymore. They'll just wait. They can, right? So they know there's more inventory coming now. So how do you get to the right price? Well, you get to the right price by calling the right agent. You get to call somebody who has been in the market for a while. This is our third cycle now. This is not new to us. We've seen this. A lot of people in this business never even seen a real estate cycle yet. So if you want good advice, give us a call and we will help you out. And the last thing I want to tell you sellers is, I'm going to read a quote here by Stephen Thomas, who writes the Real Estate Update and is an economist here in Orange County, and that's where we get a lot of our data. So let me read you what he wrote. The bottom line for homeowners thinking about selling: the longer they wait, the slower and more challenging the market will be. Right now, the market is still strong. Sellers will achieve success if they price their homes according to fair market value. Opportunity is knocking. So you know what to do, but will you do it? Will you call the agent with experience that's going to get you through this transitioning market and still get you the most money you can? Well, if you don't know someone, then give us a call because we can help you out. And this is the end of Tustin Talks. And it's the second time I recorded this today because guess what? The first time I did it in slow motion. And if you think this was long, you wouldn't have wanted to watch that one. So anyway, we'll see you in 2 weeks. Bye-bye.